The sky is falling again. Biggest single day drop in gold price since 2013. It's kind of a big deal, right? Should we have sold? So gold fell nearly 8% from its recent high. Silver fell nearly 12%. Those are significant losses. And if you looked at those numbers alone, it would be really easy to think that maybe the run is over. You have to go back to 2013 to find single-day drops like this. Now, step back for a minute, though. Rationally, a consolidation makes sense here. I've mentioned in each of my past 4 videos that I expected some kind of pullback, even though the primary theme in them has always been that there's still a long way to go up. Now look, when you see an 8 and 12% drop almost overnight, it doesn't feel like a market that's headed to $5,000 and $70 respectively. It feels like a market that just blew its top. And the traders listening to this, well, you're probably involved in that sell-off. And at least a few of us who weren't might be wondering if we should have been. Now, before we take that further, quick shout out to channel sponsor Summit Metals. If you're looking to buy gold or silver, they have you covered. And hey, if you're looking to sell, they have you covered there too. They'll take care of you on both sides of the sale. SummitMetals.com. So we need to reset our perspective a little bit. Gold fell 12% from a number that I hadn't even had a chance to mention in a video yet. It's been a silly run for an asset that doesn't move like this. At just over $4,000, gold is still up 55% year to date. Think about this. The price of gold January 1st, 2025 was $2,624. So we're long past my personal expectations of where we would end the year. At the end of last year, I was guessing we'd see 40% gains. Mid-year, I said 50. Either one of those would have been historically aggressive forecasts, and we're still ahead of them. So before we talk about selling or what went wrong, I think we need to at least acknowledge just how extreme the current move has been. Now, the thing that stands out to me is how the stories explaining gold and silver's moves are starting to blend together. Now, every story we hear points to the same conclusion. Prices are going to go much higher. And because they are going much higher, every story seems believable. It's a little bit of a feedback loop where the price action validates the tail, regardless of how crazy. Well, I'm going to focus more on gold again because the dynamic for the two is different, and those stories with silver tend to be a little bit more crazy than the stories for gold. Now, you probably know the stories that I'm talking about. Global currency resets, kind of the let the wild rumpus begin stories. Those are typically 90% imagination, 10% reality. And the problem is that the part that we see, the price explosion, makes it all feel true. And that distracts from the part that actually matters, why it's exploding in the first place. Now, the reason I bring this up is that the less realistic stories about why gold and silver are surging make cases for even bigger gains than the wild growth we're already seeing, as if we needed more. And once you buy into a story that isn't real, well, everything that happens after that has to fit that same narrative. So if the price keeps going up, the story was right. But if the price falls, well, then it can't be real. It has to be manipulation. Now, what's actually driving the price surge isn't really mysterious. It's monetary policy, it's debt, and it's demand. Same things that have been pushing gold and silver higher all year. Rates, they've stopped rising, the dollar's been sliding for months, and central banks, especially in Asia, keep buying record amounts of gold. I mean, it seems pretty clear that what we're seeing now started with some de-escalation of tensions between the US and China. It continued with a technical sell-off. So taking profit in a market that's probably been overbought for weeks. Traders are locking in gains after a wild month. Nothing new there. The result, though, was the steepest single-day drop in over a decade. So yeah, volatility is back, but nothing has really changed for the longer-term trend. So whether you should have sold or not is probably only relevant to the traders in the room right now. It's more a case of whether we should have bought at $4,300 if that's what you did. But if you weren't buying the stories being spun about global monetary collapse and total reset, well, you probably didn't go all in at $4,300 or above. And a single purchase at a price higher than today's spot price really shouldn't bother you. That kind of thing is going to happen. Now, I've been called conservative here before, presumably by people who buy into the high drama stories. But if you've been around for a while, you know my approach. I just try to find actual reasons for the moves that we're seeing. If you were to go back to what I was saying in 2020, I think it holds up pretty well. The popular consensus at the time was that gold and silver were just melting up, rocket ship to the moon. But that wasn't the case. And the reason that my price outlooks from 2020 through 2024 were so close, outlooks that people also called conservative at the time, is that I stayed focused on the real causes, not the noise, and that hasn't changed. Now this year, though, I'm going to have to admit to being conservative with expectations. I started out expecting 40% gains. New data meant new expectations. So I've been adjusting that outlook all along, but it seems like everything that I've expected has just happened a lot sooner than I would have assumed. And where we are today, even after an 8% drop, is roughly where I thought we would be by the end of the year. So we had to climb all the way up past $43.50 and then give back $300 just to land at the level that I felt was realistic for this point in the cycle. It's a pretty dramatic way to get there. Now, that's not to say that I was right all along. I don't know if that means price caught up to reality or that I didn't give October volatility enough credit, but it's hard for me to look at the current price and think of it as a huge drop when we're up 55% on the year. Most people, though, regardless of the story that they're tuned into, are probably going to see this drop and expect more drop. That's the part to be careful here, because what happens in that case is that they don't buy when we get a pullback. And then a year from now, when gold is considerably higher, they think, man, if I could just get gold at $4,000 an ounce again. Now look, I'm not telling anyone what to do, when to buy, when to hold, but if you're worried about whether or not you missed your opportunity to sell, well, that's usually just a game of patience. And if you're not buying because you think the trend will keep falling, it's worth remembering that everybody feels that way instinctively, but the data doesn't back it up right now. The overall trend still points higher. Short-term factors like the US government shutdown, US-China trade negotiations, even the Russia-Ukraine talks, they're all worth watching, but the price isn't going to keep dropping just because it's been down for 2 days after the biggest rally since 1979. So if the price drop shook you up a little bit, I would just say remember the pullbacks are part of every real rally. Gold has never moved in a straight line, and it's not going to start now. Nothing's changed with the fundamentals, and a lot of what's happening right now is just noise. What matters is whether you let that mess up your plan, because the people who stay realistic and look for the actual causes are going to be the ones with a much better chance of coming out ahead. And let's call it good there. Let us know what you think. Are you buying the dip? Or are you waiting for more dip? Let us know. And while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you want to hear more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.